Good morning and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin and I am here with my father, Carl Swenlin from DecisionPoint.com. And we are going to help you determine the trend and condition of the market. And then we work on finding those stocks that will ride that tide. So let's go ahead and get started with letting you know Q&A boxes for you to send in your questions and symbol requests. For Carl and I. The chat box is for you to talk amongst yourselves. We have Fred in the chat room. He is moderating for us. So go in and say hello, where you're from. And just remember when you're in the chat room to use the drop-down menu above your comment to send it to everyone. Otherwise, it only goes to Carl and I, and we do not watch the chat box. So questions and symbol requests go in Q&A. If you could be kind to other members of the room and not request too many more symbols than just the one, so that everybody gets a chance to see their symbols, that would be great. All right, it is now up to you, Dad, to take it over. And I know you wanted to talk a little bit more about regional banks.
Yeah, of course, that's got to be number one on the list. And here we have the regional bank ETF, KRE. And we can see where the breakdown began. I wrote an article last week about all the warning that we got from the charts on this breakdown. And there was plenty of warning there, and certainly not much excuse to being caught up in it. Right now, notice that it's rallying. It was up quite a bit more than it is right now, but notice we've got a pennant formation, kind of a droopy pennant in reverse, which is bearish, and that would imply another leg down. I really don't rule anything out with this because of all the background noise regarding it, and so we could easily see a breakout. I wouldn't be a buyer in this sector, not anytime soon. That's my own personal opinion. Okay, let's say. Let's take a look at the under the hood, as Erin likes to call it. Notice relative strength versus the SPY crashing and just running along in a negative area. Stocks above the 250 and 20 EMA in the basement. Above the 50 is at zero. The other two might as well be at 0 too. The Silver Cross Index, that is when the 20 EMA crosses up through the 50 EMA, percentage of stocks with that is 0. Percentage of stocks with a golden cross, which is the 50 EMA breaking above the 200 EMA, is 15%. Still not anything worth talking about there. Looks like the PMO might be bottoming. That can be a positive thing, but let's face it, the PMO is well below the zero line, and all it has to do is start the price moving sideways for the PMO to start moving up back towards the zero line. You know, all things being equal, the PMO will be at zero. I would not take a PMO bottom as a good buy, not on this one. Okay, did I miss anything?
I do not believe so. I think you covered it well.
Okay, let me jump into market indexes. I've got the small cap S&P 600 small cap ETF getting a 50-200 downside crossover, which is known as the death cross. And strangely enough, the NASDAQ 100 has the 50 crossing up through the 200 EMA, and that's the golden cross. So that's quite a difference in the two fairly prominent market indexes. We do notice that the tech stocks, which is a lot of what the QQQ is, they have been rallying. Let's take a look at Apple. Okay, it's down now. It was up earlier today, but Apple's in a rising wedge formation, which is bearish. We expect that to break down ultimately. Amazon, I don't see a lot of good things happening for Amazon. Right now, you've got a bottom above a bottom, but next we need to get a top that's above this top to set a new rising trend off of this low. And that doesn't look very promising at this point. Similar problems with Google. Meta is doing really great. It's low in November, and it's been doing really well since. Microsoft, they were talking about it this morning, about it as being one of the leaders in the AI sector. And yes, that is doing well. Netflix is a rising trend, rising bottoms there. And let's see, NVIDIA doing really great.
I don't know on that last one, the PMO on Netflix, yeah.
Okay, the PMO is rising. And
and we got that new crossover.
Right. And NVIDIA doing really spectacularly. Tesla, I don't see great things happening here. I just think the electric vehicle sector is starting to get a dose of reality of what it is like to own one of these vehicles. And I just think, and I thought of it as maybe a good choice for me to have to drive around town. Just who needs to spend that kind of money?
Time for the golf cart, maybe.
Right. Okay, let's see. Let's go over to the market here. Okay, it started out strong today, and it's still maintaining above this declining tops line. The line drawn across these two tops is really the dominant line for the formation, but since this one here, it's failing to get up to that, and that's never a good sign when you fail to make the top. You notice that this failure is followed by a decline. Now, again, we do have a PMO crossover buy signal. Again, I'm not really bullish. We are theoretically in a bull market right now, a cyclical bull market, but I'm personally not a buyer. I wanted to look at the new highs, new lows. These are updated as of the end of the day, so this is Friday. They're expanding as we should expect. You see them contracting, new lows contracting as the price is going higher. This is what we would expect. A bias assessment. Basically, this is the Silver Cross and Golden Cross indexes for the S&P 500. And we also track the stocks above the 250 and the 20 EMA. And let's see, for the Silver Cross, we're looking at the 50 and 20. So the best we could do right now is go up to 31%, which would be an improvement over where it is now. And for the Golden Cross Index, and they have 27%. Actually, that's the best we could expect in the way of Golden Crosses. So we're going to expect to see the Golden Cross go even lower. Notice that they're both in a declining trend. Short-term indicators, these this STOB and STOV for breadth and volume, and we've had highs. We had 3 attempts at making new highs or getting to the upper part of the range, and we failed 3 times, barely above zero line. And here's the intermediate term indicators, intermediate term breadth momentum and volume momentum indicators. Right now, they're in a rising trend. That's not always going to be a deciding point. That doesn't mean it's not, the rising trend's not going to continue. Would like to see this go a little longer in terms of the duration of this decline. The dollar is, it popped up on Friday, but now it's dragging back. Gold has not been doing well because of the strength in the dollar, but it's not very long-term in that regard. When we first started this rising trend, it was very steep, and I speculated that it would probably break down, which it did, just to make it less accelerated rising trend. And at the time this happened, I said it doesn't look like enough yet. So I think we're still correcting a little bit to get this rising trend a little along these lines, that something more sustainable. But gold has really been doing well. It got up over 2,000 last week.
Kind of makes sense. We might be seeing a little hesitation for a breakout, given we are at those new all-time highs.
Right, and we've got some churning going on with the bonds market, which we'll look at in a minute or so. Okay, oil rallying after hitting this low in here. Let me look at a little longer term. Yeah, it's in a declining trend, and maybe we'll break out of that on this attempt, but right now it's in a declining trend. Here we go with bonds. They had a rally of flight to safety, and as of today, that seems to have ended. It hasn't broken down yet. This is a rather lopsided pennant formation, but as of right now, the bonds are not doing that well, and yields are back in the spotlight. Bitcoin backing off, got a rounded top here. Not looking for anything great with Bitcoin. If you look at the longer term chart, you can see considerable resistance at the level where that rounded top started. So not looking good. Here's the 10-year Treasury yield. It's rallying. It's up 3.5% right now. So possibly the flight to safety is over. Here's, as of Friday, the yield array showing a number of durations. This looks like a good level of support right around in here. So it seems logical to me that it's going to go higher. Okay, I think I've covered everything I needed to cover. Some questions.
I think so too. I don't think you missed anything.
Okay, chart patterns such as triangles or divergences of momentum or relative performance, which frequency do you give more weight? Daily or weekly, if they do not confirm each other? Well, it's nice to have your daily, your weekly, and your monthly charts in gear, but that doesn't happen very often. Uh, the amount of weight you give, uh, whichever duration we're talking about, is what you're trading in, and what your targets are in terms of upside, and also how much are you going to bear in the way of a pullback. And I always like to look at a weekly chart. I mean, I invariably, if I'm considering a trade, I'll look at the daily first to see whether there's an entry, possibly in the near future. But I'm going to look at the weekly chart and to see where the longer term resistance and support are. Anything to add to that, Erin?
No, I think that that's pretty much it. I mean, with Decision Point Diamonds, we look at a daily chart kind of to figure out if we want the stock. We tend to be more short-term in Decision Point Diamonds, but we always look at the weekly chart for each of those stocks as well, because you do need to know the backdrop of that trade. Are you in a long-term bearish bias? Do you have a level of support that looks like it's going to hold, et cetera, et cetera? Those things I think are important. Even if you're a short-term trader, you want to look at that weekly chart. But I use the daily to pretty much figure out whether I want it or not.
Okay, Thomas says, buy when they cry, sell when they yell. Presently, what sector makes investors cry and makes them yell? You'll be covering that.
I will when we go through our sector analysis. So we'll keep that one up there.
Okay, and let's see. I don't have any broad questions, so I'll turn it over to you.
All right, sounds good. Okay. So what I wanted to cover before I get into those sectors, let me share my screen properly here, is to talk a little bit about divergences, because we had a question come in on email about divergences, and I wanted to just kind of cover in basics of that. I do have a workshop. You can find that on our website. I will show you exactly where. And you do not have to be a member of the website to access these. Notice I haven't logged in. So you can come down here to our workshop links, and you will see one where I went over divergences, confirmations, and reverse divergences. I'm only going to cover divergences right now, and I'm only going to do it for a few minutes. So bear with me as we go through it. But first thing I want to show you is all these vertical lines. And Carl really was smart to come up with this. I don't think we've done this through the entire career of Decision Point, but the vertical lines are key when we want to discover divergences. And what do they mean? We put green verticals at major or cardinal bottoms is what we like to call them. So major price reversals. And we do the same, only we look at cardinal tops when we do the red verticals. Because when you're looking for your divergences, you want them to pretty much occur right between these two lines so you can get an idea of what's going on. So for example, this is an excellent example of a negative divergence. We have lower lows on the STOs here, but we have higher highs on price. And so that was a trigger or a key attention flag to let us know that things weren't looking so good and that we might be in for a decline. And sure enough, that's what we got. Now, I will tell you, we obviously did not know to draw this particular vertical line at the time, but it was a pretty obvious catch because you did see those declines. And once we did put in that vertical, it became even more clear that we had those divergences. But a rule of thumb when you're looking for divergences on indicators versus price, you always want to look at, now think about when we look at price, we're always looking at rising bottoms and declining tops. Well, when you're looking for divergences, you're going to do the same thing with the indicators. You want to look for declining tops and rising bottoms. we don't cover rising tops right here. Like that's not considered a divergence right here. We're looking for declining tops and rising bottoms, and that starts with the indicator. And then you go up and look at price. What's price doing during that time? Well, you can see we had rising bottoms and we were getting declining tops here. So that gave you the hint that maybe we were getting ready to come onto a bottom, rising bottoms with declining tops on price, or declining bottoms on price is pretty important. So that's kind of the basics of divergences. Look for rising bottoms and declining tops on your indicator, and then compare those to price action. Now, if you happen to be in a section, let's say, where you're getting rising bottoms and price is showing rising bottoms, that's just a confirmation. We find that confirmations, while they're interesting, they're not usually that useful in, obviously determining when you're going to get those turns in the market. So those divergences are more important. Did I miss something important with that? I know we talk about this a lot.
Yeah, if you look at that negative divergence in the January-February timeframe, we would not have drawn that vertical red dotted line while that was happening, but it's something you can watch price going higher and watching these lower tops on the STO. So you can see that in progress and know there's a problem with the advance, the price advance, and it's just it doesn't always work. I mean, that's just
right.
The beast. But that's a really good way to keep out of trouble.
So I put the new highs, new lows chart back up because we have a confirmation here. You can see the rising bottoms and rising bottoms on new lows. However, notice that we had an expansion in new lows. But what was happening with price? We had 3 days of rally. That's a negative divergence, right? Because we're seeing more new lows while we're getting price moving higher. So those are the kind of things that you want to look for. An expansion of lows when you're going higher is certainly a negative divergence. Okay. So let's go ahead and get into looking at the sectors. And I had that up there. Whoa, that's a little too much. Yeah, I'm afraid I can't get that too big because otherwise we're gonna, yeah, that's not gonna work. So what I have up is a candle glance of the sectors. And I know it's a bit of an eye test right now. I apologize for that. But what we're looking for in the sectors is where is the rising momentum? Where is the strength coming from? And we alluded to this. There was a question about when, which sectors right now are making investors cry versus which are making them yell, because that's when we want to look for those reversals. So right now we know that tech and even utilities here are showing rising momentum. These two have actually been showing a lot of strength, but particularly technology. Healthcare is starting to make the move, and we have the new PMO buy signal. I like that. Discretionary is giving us a new PMO buy signal, and comm services also giving us a new buy signal. If you want to know a sector that's making people cry, well, I have to say that would be in the energy sector, that would be materials, where you have the PMO, the rising momentum, we have declining momentum, we're losing momentum. Financials, of course, have also been that particular area. Given what's been going on with the banks, this is definitely a sector that's been making people cry. Certainly looks like it's primed for a reversal, but as Carl looked under the hood, we don't have any stocks to really fuel a rally there. We have all of them pretty much in declining trends, losing momentum. And while we're starting to see a little bit of a deceleration in the PMO, we're still not getting price to move out of that short-term declining trend. So I would say financials are probably the one place where people are seriously crying. But I don't see a reversal on the horizon for that, when we normally look for that if you've got a beat down sector. So when I'm looking at the sectors, really, we're getting a pretty nice move out of most of them with rising momentum. I think that consumer staples and healthcare are starting to look particularly interesting with these nice little breakouts here. And so I'm liking those two sectors for sure. But technology, if you're looking for a place that's just been carrying that relative strength, it'll likely continue to show that strength. Semiconductors still look good. Software is starting to improve even more. So I see technology still being a leader at this point, which is a little bit strange because typically when technology leads, the entire market starts moving up. But that hasn't been the case this last time around because technology has been doing well, but we haven't seen quite the move out of the market that we've had there. But healthcare and staples, honestly, when I'm looking at price action, look really interesting right now. Healthcare, though, still beneath those key moving averages. So I think staples is probably one of the more interesting spots this morning. Utilities also with that PMO turning up above the signal line. But honestly, let's go ahead and dive into consumer staples, which was not really what I had planned on doing today. But looking at the price action, it's really hard to not look over there. Notice the relative strength really starting to kick in here. And a lot of that's probably we had, people concerned about, with the banks and that sort of thing. We've got the market started to move down. This is an area that's considered defensive. Everybody's always going to need food and buy food. So this is typically what you're going to see in staples. So not a surprise really to see it at starting to show some strength, but very interesting that getting this breakout right now in technology is one of the stronger sectors going on. I also see that PMO rising. It should get above the zero line, but let's look more under the surface or under the hood, as we've been talking about. For all of our subscribers out there, you have access to all of these annotated charts on our website. We're going to look at consumer staples. All right. Nice breakout. As I said, that's what really caught my eye when we were just looking at those candle glance charts. You can see the RSI getting positive. Silver Cross still below its signal line. It is decelerating, but it doesn't look like we have it moving up just yet. But given that we have so many stocks above their 20 and their 50, and it's higher than what's going on here with the Silver Cross Index, since the Silver Cross is a 20 crossing above the 50, we need to have price above both of these really in order to expand the Silver Cross Index, because it's counting how many stocks have 20-day above the 50-day. So you can't see this improve unless you have more above both of those. So that's a good sign in staples. We're above the 50% level on percent above their 20, but we're not quite there with percent above their 50 and a percent above their 200-day EMAs. So there's still some work to do for consumer staples, but this is a good sign. This gives us a bullish bias in the short term, seeing the expansion here in those above their 20 and 50. Although I have to say, I imagine we're going to see even higher numbers here, given the nice rally that we're experiencing on these charts.
It looks like a shooting star.
It does. That'll be something we want to pay attention to. That means that you're getting a long wick on your candlestick. In fact, let's make these candles just so it's a little more clear. So you can see here in that thumbnail, make it even bigger. You can see the wick on this candlestick is long. So if you get a long wick on your candle at the top at a price, what could be a price top, that tells you that the bears are winning the battle here, because price either opened or at least made it to that intraday high, but bears were able to carry it down a bit lower. And that tells you that there's a little bit of a bearish bias going on there in the very, very short term. And so the expectation would be a decline. So we'll want to see if this, usually you want that candle body to be a little skinnier at the bottom, but it is something that we'll want to pay attention to, because if we close either below the open or very close to the open, we'll definitely be seeing a bearish shooting star candlestick. But I do think that this is pretty constructive. The fact that we are getting above this level of resistance, it matches up back here. We've got a touch here, touches here on those lows, a touch here. The more touches you have to a support or resistance line, the stronger it is. So seeing that breakout is certainly encouraging for consumer staples, stochastics, getting close to being above 80. So a lot of our primary indicators are showing this improvement under the surface for staples. But I have to say, if the market decides to rally here and do well, while this sector will probably do well, it's probably not going to do as well as some of the more aggressive leadership type sectors out there, like technology and discretionary. All right, so we've looked at all of the sectors. I've talked about, we haven't looked at any of the industry groups, but you had a question?
I just wanted to comment that the shooting star is not official till the close, so it could easily change to something else before the close.
Yep. And, that would be the hope, honestly, with this nice little breakout above that strong resistance level. That's what we'll want to look for. You actually can kind of make out a reverse head and shoulders here too, kind of rounding the bottom on this on price here. So I think there's some bullish characteristics, as a lot of my colleagues will say. It's a constructive chart, is doing what we want to see it do, and we'll keep an eye on it in the future. All right, so sector and industry groups, I talked a lot about technology, and we do happen to have the semiconductors under the hood indicators. So I want to look at that because technology is still showing strength. Although I have to say semis, we are seeing that PMO turning over. So maybe with semiconductors, we're ready for a bit of a pause here. But under the surface, things looking still pretty strong, although I'm noticing that we have fewer stocks above their 20 than those with silver crosses. So this could cause a little deterioration on that silver cross index. But we still do have enough over their 50-day EMA that these guys should be able to hold on to those silver crosses. But this tells me that some of those are in jeopardy. We've got the stochastics moving below 80. So I would say if you have a semiconductor, while we looked at NVIDIA, it looks pretty good. It looks like we might be in for a bit of a pullback here on those semiconductors. You'll want to watch the 50-day EMA the most closely, because we want to see the bounce off that 50-day EMA as we've seen in previous rallies. So that's what you're going to want to watch for. But semiconductors showing a little bit of weakness today. All right, I'm going to go to our industry summary, and then we're going to hit it with all those symbol requests. And here we go. Here's the industry summary. This is a great way to look at all of the industry groups. Very easy to click through and just see where the strength might be lying. For example, here we are, fixed line telecommunications, really nice turn on that PMO. It has given us the crossover buy signal, and stochastics rising strongly. So this is one way you can go in and quickly look at where the strength might lie within those industry groups. Maybe you're looking in a sector that isn't very strong, but a lot of times you're going to find that pocket of strength or pockets of strength within just by piecing it out into industry groups. So while this does look good, I do note also, though, that the 50 and 200-day EMAs are right there as overhead resistance. So that could be interesting there for fixed line telecommunications. There is a little more work to be done. Let's look in consumer staples, since we kind of spotlighted that one today. Personal products, that definitely looks like a shooting star going on here. Definitely, that's what we're talking about with a shooting star. You're going to typically see a really skinny body on the candle and then a huge long wick. So personal products, while they are looking pretty nice today on their rally, they're starting to pull back. Brewers had a nice little pop today, and the PMO is turning up, but it's still early. Stochastic still very low on the map there. Food retailers looking nice. There's your breakout. It's a breakout above the 200-day EMA. PMO already on the buy signal. Stochastic's just now getting above 80. Food retailers look very strong right here. So I'm pulling up that chart. You can click on it and get a better look at it. And I do like it, although we do have that filled black candlestick and a long wick. This is going to be a really interesting trading day to see how some of these stocks and industry groups finish when they have all of these long wicks going on right now. Really nice breakout on food products. Like I said, you're going to look for these defensive areas if the market starts to look weak. We're seeing some rotation into this particular industry group, so that does tell me that there might be some weakness under the surface. Non-durable household goods also on a nice rise, PMO above 0. Drug retailers not able to get above the 20-day EMA, but looking encouraging in that we do have a double bottom that is forming here, and the PMO is just about ready to give us a crossover buy signal on drug retailers. But if I'm going to go fishing in this particular sector, I'm going to want to concentrate on industry groups that look more like this. Soft drinks looking great. Probably want to take a look at Coke and Pepsi. Not good on tobacco. And distillers and vintners starting to show a little bit of a move there to the upside. I was in wine country, so maybe that's why. We've got a move above the 20-day EMA. Looking certainly interesting here, a new PMO buy signal. But again, I would be looking closer to food retailers, food products. And if you are on the industry summary page, you can always go in and look for the stocks within that group by clicking right here. And now you're going to have a list of which stocks are listed in the food retailers in this case. I like to organize by the StockCharts technical rank. It brings up the strongest stocks to the top and the weaker ones on the bottom. Typically, you want to look for a scooter kind of in that 70 to 80 range, 60 to 70. That's usually where you're going to start seeing some improvement. And while winners can keep on winning, it's always nice to find that new strength. So we're going to go ahead and hover over these symbols so you can see what those little mini charts are doing. Krispy Kreme hitting some highs here and looks like it's pulling back slightly. This looks like Weiss Markets looks interesting with its little pop, no shooting star, PMO bottoming above the signal line, and relative strength really starting to kick in for this stock against its industry group and against the S&P. And the group itself is doing fine at relative strength wise. It is starting to outperform the S&P slightly. Nice move on stochastics for Weiss Markets. Let's go really quickly, and we're going to go back and look into the food products area. Same thing, organized by scooter. And you can see when you look at these, you can see why their scooters are in the 90s. And this is why I'm saying that while you can get into some of these, winners do tend to keep on winning. The run could be nearing its end, though. So that's why I'm kind of looking for something a little bit less. Wow, look at that. That's a pretty crazy looking chart there. So far, I'm not, okay, there we go. So this is probably a low volume though. Let's not pay attention to that one. I like to have at least some decent volume on these. Lamb Weston, let's look at Lamb Weston. Nice move, a little bit of a filled black candlestick going on there, but the PMO is turning up. This would be a problem for me, though, I have to say. When I look at Lamb Weston in comparison to its industry group, the relative strength is starting to fail there. So might have to find a different choice within this group. Let's see. Let's look at some large caps. Mondelez. That looks very interesting. Really nice breakout here going on. Happened Friday. Looks like we're going to see a continuation. So Mondelez looking pretty good in that food products area. All right, so I think we did our drill down and our sector look. So it's time to get into either more questions or those symbol requests.
Yeah, I don't have any questions at this point. AON.
Okay. All right, let's go for it. Okay. So AON, looking pretty constructive, as we were saying earlier. You've got stochastics above 80, PMO buy signal, RSI positive, and a tiny little short-term breakout here, which is very interesting. Look at the relative strength here. This is the kind of stock I'm looking for when I do decision point diamonds, where you've got the high relative strength, particularly on the stock against its group. You've got, you can see some new volume coming in with rising bottoms on the OBV, although it would be better to get it a little higher and into this range as far as the OBV. But for now, that's nice to get a little confirmation. I like this. Let's look at some possible targets. So the next level of overhead resistance is about 5.25% away. So that's when you really will have to start paying close attention if this rally continues. And your stop level, I would be looking, this is where you'd love to put it, but that's a 10% stop. I always like to go beneath support levels. But let's look back here. We can see there's some strong support at this level. So if we go just below that, that could be a good 6.5% stop on this one. I like it.
Walmart.
I forgot I need to get to a 5-minute chart too. It is a trading room. We've got to show people how to trade these stocks. All right, this looks pretty good. It's been in a trading range. I usually try and avoid those. But it is in consumer staples. We just saw that there's some pretty good movement there. Walmart not listed as a food retailer, but we know they do sell food in some of their larger stores. Like the look here, kind of a little head and shoulder-ish look, head, left shoulder, right shoulder, but mainly a nice rounded bottom, break above primary, those key moving averages. You can see PMO buy signal coming in, PMO rising nicely, stochastics above 80, rising relative strength. You guys have been watching this because you're showing me stocks that are the ones that I usually am looking for. So I know that you must be using similar analysis methods. I like Walmart here. Let's look at upside potential. So the next level of resistance is only 2.5% away. So you will want to pay attention to this one as it gets closer to that level. Next level up is about 6, almost 7%. I would pay somewhat attention to this big kind of Pinocchio bar, as Martin Pring will call them. They don't necessarily mean something meaningful, but this is a crazy wide trading range. So possibly a move up here, which would be about 10.5%. So pretty good upside potential, a little bit of work to do when it hits those levels of resistance. The stop level, again, that's where I'd want to set it. And fortunately, that's only about a 6.6% stop. So not too bad. I would want to see a weekly chart, though, to get a better upside target. And that would be here at these all-time highs. And that is only about 10% away. I like to double my stop percentage on an upside target. So we would have to count on a breakout to new all-time highs on Walmart. Certainly with the PMO on the weekly chart turning up is possible. If we wanted to trade Walmart, I like to go to a 5-minute candlestick chart. These are really excellent for timing your entries and exits. We use a 5-minute RSI, 5-minute PMO, and I like to kind of pay attention to volume. And as you can see, what we want is a PMO crossover, upside crossover or buy signal combined with a positive RSI. So technically this right here would have been your buy point on the open. Certainly wouldn't have been as good as if you could have bought it on Friday. The one thing I would think about is the fact that the RSI immediately got very overbought. So I would be watching it carefully if I had made my entry here. PMO is starting to turn over back here. That would be your sell point. So depending on when you were able to get in this bar, you still would have come out with somewhat of a bonus there as a day trader anyway. PMO's sinking right now, but price is still moving kind of higher. It's just in a solid rising trend here that's not really accelerating or decelerating. And so the PMO is kind of tending back to zero right now. So I don't see that as a negative. I would be watching for entry, possibly on a more of a pullback here since the PMO hasn't quite turned up. If you look in the thumbnail, it actually is topped here beneath the signal line. So I think I would be waiting on an entry, probably try and get it down closer to this level of support at about 143.85.
Okay, Stephen wants our opinion on the SPY, and I covered the short term, but why don't you put up a weekly? Okay, PMO is rising, weekly PMO is rising above the zero line. That's positive. And you do have the breakout price above that declining tops line. So right now it's looking positive in the long term. And I have to say I'm not enthusiastic. When you say a SPY, it's not just SPY, it's the market. And I'm not enthusiastic about the market. But technically right now, it looks solid.
Yes. So really what we've been saying in our DP alert is when we've looked at the bias chart, which I think is kind of one of the most important charts on here, we do have a short-term bullish bias because we are seeing an expansion here in participation. And these percentages are higher than the Silver Cross Index. So in the very short term, we do have a bullish bias. It's past that things start to look a little bit more murky because when you look at the GCI at almost 50%, but then seeing 27 and 36% above their 50 and 200, we know this is going to continue lower. So the bias is bullish in that short term, but we're not there in the intermediate or long term. So we have to keep that in mind.
PANW.
PANW. If you're going into the world of technology, this is often really a great stock to be a part of. They're in the cloud networking kind of area. Telecom equipment, obviously, is what the industry group is. But breakout, textbook kind of pullback to that breakout point. I think that looks pretty good. The problem is this PMO in decline. You know, I will sometimes be okay with a PMO declining if we're looking at a possible reversal area. I don't like it when I see this little breakout and then a PMO that's still going down. Now, it could just be due to the fact that the rising trend has been pretty solid and not accelerating or decelerating. But overall, that really would bother me about getting in on just the breakout, because if we're going for a breakout move, we really want to see that affect the momentum. And it's not affecting the momentum right now. The OBV is kind of confirming the rise here. We do have a higher high here than we do back here, and that's matching over with price. So there's no reverse divergence, as we call them. Stochastic's above 80. So, I mean, the chart is good, but this is the big problem for me. I just would like to see the PMO at least making an effort to turn up on a rally that's almost 1%. We're not seeing that there. So I'm not a fan.
ETNB.
All right. Looking pretty good as far as a breakout, natural mechanical pullback to the breakout point. This is what I'm talking about. Here's a PMO. It had a nice shot in the arm, obviously, with this big rally to the upside. But this decline that happened on Friday it didn't affect the PMO at all. I mean, it didn't decelerate or anything. Stochastics didn't turn over. Stochastics are still rising. They're now above 80. Little hesitation here on relative strength, but it had a big down day on Friday. But overall, we're still seeing a rising trend in relative strength for the group, and certainly doing well against the industry group itself and the S&P. So that's all a good sign. So I like this. I like the way it's pulling back and the PMO is really not being affected because of that strong move to the upside. We want to take a quick peek at a weekly chart on this one. Really interesting coming out of this basing pattern, really heading back up. This is the strong level of resistance, top there, bottom here, bottom there, and it's broken above that resistance level. Notice also the weekly PMO turning up above its signal line. I think you found a good chart here. I would just warn that it is in biotechs. Biotechs can be very, very volatile. So going in on most biotechs, you just need to be ready for some swings of about 7 and 8% now and then. So keep that in mind. 5-minute PMO on this one, if you wanted to enter. PMO trying to turn up. We don't have the crossover buy yet. And the RSI is just now getting positive. And really, let's see, PMO pulling back, but mainly because price isn't doing much. I would be watching for that PMO to turn over. That would suggest to me that we're going to get the breakout coming up. Let's see, rising bottoms, flat top. The breakout should come at this level. OVV is sort of trending down, so little loss of interest here on this one by traders. But I think that looking for that move down to the open, or at least down to this level, that might be a good place. Oh, look at that. That's a super strong level right there of support. So I'd be paying attention to this. But if this rally starts to get a little bit of legs and the PMO turns up, I think that would be a pretty good entry point.
Snap.
Comm services, we're seeing was definitely the leader before. It kind of cooled off, but looks like it's coming back to life. We saw Netflix looking really good. And I'd say Snap looking pretty good itself. I wouldn't consider this a double bottom. Everybody would say, well, wait, it looks just like a W. That should be a double bottom. Double bottoms are reversal patterns. So you need to see them come off of a decline and not a rising trend. So if anything, I could see flat top here and rising bottom sort of, but I would say this is more of a trading range, maybe on a flagpole, so possible flag here, but not a double bottom. It looks like it, but it's not an official one, if you will. PMO on a buy signal, stochastics rising. I like the relative strength here in the thumbnail. You can see it is improving somewhat. I like the chart. Let's see what's our upside before we hit that level of overhead resistance. That's about 9.5% away. So that's pretty good. Actually, it's probably more because that's about right there. And the stop level, this becomes tricky because this is the strong support, but that's like 20% away. So that tells me if you're going to get involved in this one, your downside is going to be tough on that stop. The best you're going to really be able to do, at least for me, I know I don't like to go more than 8%, would be right in this level, at this level. So maybe at that candlestick there, you could set your stop right in that level at about $11.04, $11.05, somewhere in that area, 10.95. That'll get you in that 6% range and at least below this level of support right down here.
That's why.
But not a huge fan, not a huge fan. All right, this was a prior diamond. I'm going to move it to this because it doesn't have all of the indicators underneath. All right, Symbotic. I believe this was a technology firm, but I couldn't say for sure. Let me just look really quickly just so I can be useful here for you. Well, it is part of the NASDAQ. It is this company, robotics. That's right. So yes, technology. Really like the move up. Like I said, prior diamond, so that's a nice sign. I did own it for a while, got out of it. before this decline. So I wasn't too unhappy, but boy, I'm unhappy seeing that big flagpole with a possible flag formation. Let me add the thumbnail here. And we can see in the thumbnail that currently we have a bullish engulfing candlestick, which tells me that this does look like a pretty solid flag. Big move up, mechanical pullback toward the 5-day EMA support level, and now starting back up. RSI is getting on the overbought side, which could be a problem. It's been a problem for short-term declines off of that. But I'd say we got that short-term decline off of this overbought condition. PMO looking great. I don't see anything wrong with this chart.
Okay.
Let's go to the weekly. Yeah.
We have 2 minutes.
All right, 2 minutes. Let's get a couple more. I think I see Coco. Really nice look here, I have to say. Kind of accelerating though, looking very parabolic. So getting in now might be a little bit of a little tricky here, because while it still might continue up very quickly, it is very overbought, and typically parabolic moves to the upside as that rising trend gets steeper and steeper and steeper. It's harder and harder for it to maintain, and you'll get a breakdown, and it's typically a heavy breakdown down to the last basing pattern. So you're looking at a drop probably down to this level in maybe 1 or 2 days because of this this parabolic formation. But it looks nice. I would be holding it. I'd probably be setting a trailing stop on it. But I don't think I'd get involved in it just now because of that parabolic move. I'd be afraid that I'd get in just in time for it to the bottom to fall out.
Okay, Amgen.
Nice little breakout, not having the best day, but it's not hurting the PMO whatsoever. Stochastics not being concerned either about this decline. In healthcare, another biotech. I like the look. It's got the 50-day EMA to overcome, but given these indicators, the way they're set up, I would expect the breakout here at the 50. Next level would be, of course, the 200. Let's see what we're looking at to get to the 200. It's about 4.5. This is the strongest level of overhead resistance, though, and that's about 8+% away. So I like the look because I do have some upside potential before I hit those resistance levels. Certainly price could turn down before then, but I like the way these indicators are set. So I would say Amgen looking good. And with that, we must end the program. It's been lovely having you here with us. You will find the replays on YouTube at noon, noon Pacific time, around 3 p.m. Eastern is when the recordings go up on YouTube. So you can look for them there. And we will say good luck and good trading and see you next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.